This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. As usual, I am Chris. As is not usual, what is unusual is today is not Wednesday, it is Thursday. This is a makeup episode. I was a little under the weather yesterday. In fact, I went to bed on Tuesday evening and didn't get out of bed until early this morning. So feeling a lot better. I owe you guys a DCA Wednesday episode. Fear not, however, if you're following me on Twitter at BTC Bulletin Pod, you already know that we made our DCA stack on time. I was able to roll over just long enough to make that purchase, take a few screenshots so I had the data I needed to do this makeup episode. And now I am in the studio. It is a bright early morning here on the Space Coast of Florida. It's actually almost a little chilly out. It's starting to warm up quick. I had a jacket on when I first walked in here and started setting up the studio, but I have since peeled it off and hung it up on the rack. So I think it's going to be a nice day today. It got down into the 50s last night. And speaking of the 50s, that's an interesting story that I have to relay here in a little bit. But, you know, so much happened in the last week or the last week in one day, although it hasn't been quite a week in one day because normally on DCA Wednesdays, I do the show in the evenings. So really, we're less than 12 hours late, but I do apologize, and I thank you for putting up with this coming out just a little bit late. Hopefully, we cover everything we need to and more. And speaking of that news, obviously this is kind of old news now because it literally came out like the day after our last DCA Wednesday episode, and that was the ruling in the High Court in London that Craig Wright is officially not Satoshi Nakamoto. If you're living under a rock, you know that Craig Wright has been fraudulently claiming to be Satoshi Nakamoto for years now, and he's been, in a very non-Satoshi way, throwing his weight, or Calvin Ayres' weight, around as much as he possibly can, suing anybody who claimed he was not Satoshi Nakamoto, at least in a jurisdiction where it was easy to sue people for quote-unquote defamation, going after Bitcoin developers. You know, we don't need to get into this and rehash it because this has been a long time coming, and I think pretty much everybody is sick of CSW by now, and the sooner we can forget about this troll, the better. But long and the short of it was, the Crypto Open Patent Alliance had finally gone on the offensive, and they went after CSW and sued him in British court. And closing arguments were last week, and normally you would expect that it would have taken a couple of weeks, maybe even a month, for the court to issue its written opinion. And in fact, they have not issued their written opinion. But the case was such a slam dunk that the judge took the unusual steps of addressing the court after closing arguments, declaring that Craig Wright is not Satoshi Nakamoto. Forbes magazine reporting 6 days ago, Craig Wright is not Satoshi. After the closing statements, Mr. Justice Mellor informed the London court that Craig Wright is not Satoshi Nakamoto, the pseudonymous creator of Bitcoin. This judgment marks the end of Wright's long-standing claim to Satoshi's identity and as the author of Bitcoin's white paper. Of course, the real Satoshi Nakamoto put Bitcoin in the public domain, and going after people trying to claim that Bitcoin was his intellectual property that you were infringing on was the exact opposite of what we know Satoshi and the real Satoshi intended to do. In his complete statement, Justice Mellor addressed the court by saying, "Thank you. Well, I thank all the parties for their written, closing, and oral arguments, and they've been very helpful indeed. They will require me to prepare a fairly lengthy written judgment, which will be handed down in due course. And for all of those who have already been hassling my clerk as to when the judgment will be ready, the short answer is as follows. It will be ready when it's ready and not before." I'm interjecting here. There were a lot of issues, a lot of evidence, a lot of fraudulent evidence, a lot of evidence that CSW presented, and then he kind of even rebutted his own evidence. It was just a bizarre trial if you're following along. And so it will take a while for the justice to write out a lengthy legal opinion in legalese describing exactly why he got to his conclusion. But I continue with his words. However, having considered all the evidence and submissions presented to me in this trial, I've reached the conclusion that the evidence is overwhelming. Therefore, for the reasons which will be explained in that written judgment in due course, I will make certain declarations which I am satisfied are useful and necessary to do justice between the parties. First, that Dr. Wright is not the author of the Bitcoin white paper. Second, Dr. Wright is not the person who adopted or operated under the pseudonym Satoshi Nakamoto in the period of 2008 to 2011. Third, Dr. Wright is not the person who created the Bitcoin system. And fourth, he is not the author of the initial versions of the Bitcoin software. Any further relief will be dealt with in my judgment. I will extend time for filing any appellate's notice until 21 days after the form of order hearing, which will be appointed following the hand down of my written judgment. And I ask the parties to seek to agree an order giving effect to what I have just stated. So I'm afraid any further information any further, I think this is a typo, you'll to wait for written judgment. I say you'll have to wait for written judgment. So obviously, it's going to be about a month or so before we know whether CSW appeals this, what grounds he would try and appeal for, etc. But the long and the short of it is, it was such a freaking slam dunk if you were watching, even if you're not an attorney, and I'm not an attorney, and even less of an attorney in England, because I'm fairly familiar with how the court system works in the United States. Obviously, it works differently under English law, but just listening, it was almost insulting to your intelligence to listen to that clown show. And thank God it's finally over. Speaking of nightmares, and this wasn't really a nightmare, it kind of was a nightmare. On I think it was Sunday night. Maybe it was Saturday night. I had this really vivid dream that Bitcoin had quote unquote crashed all the way to $50. Not $50,000, $50. And what made the dream so stressful was that I didn't have enough money to soak up all the Bitcoin I could. I was trying to come up with enough money that I could buy at least one full coin for every person I knew. So when the price went back up, all these no coiners, I'd have a coin that I could just give to them. In addition to stacking as much corn for myself as I possibly could. I can't tell you how disappointed I woke up when I did wake up from that dream, because obviously it was just a dream. But I know a lot of you would be in the same boat that I was. If Bitcoin just tanked, I mean, wouldn't even have to go to $50, but if it just had, a massive pullback to, I don't even want to speculate. But let's say you got a second chance to purchase in the teens again, like you did, and hopefully you did stack when it was in the teens during the lows of the previous bear market, which I believe we have thoroughly climbed out of. Anyway, that was interesting. And obviously I can't conceive of any reason why that might happen. I don't even know what spurred it, because really it wasn't a nightmare. It was a great dream. I was loaded for bear. The only thing that was stressful about it was that I couldn't come up with enough cash, because, I don't have a whole lot of dry powder. I like a lot of you, I've been stacking every chance I got. So I'm 100% in, I'm all in, so to speak. And anyway, that's neither here nor there. So normally we would have had this podcast yesterday, and we would have done our DCA Wednesday stack. And like I said, I did make the stack. At the time, Bitcoin was at a block height of 835,609. And that put us a mere 4,390 blocks away from the looming miner reward halving. And at the time, Bitcoin was valued at $67,718 US. And so I made what was our 139th stack in this DCA Wednesday journey. That stack for the $20 purchased us a stack of 28,870 Satoshis. And like I said, we stacked at $67,718, which is a little over $5,000 cheaper than we had stacked the previous Wednesday. So obviously Bitcoin had quite a bit of a pullback, depending on where you get your data. Bitcoin dipped as low as about $60,000. It was $62,000 for a while, and hopefully you were able to buy the dip when that happened, because I was stressing about this just the last DCA Wednesday episode when we purchased at 72,899, which was our all-time high as far as our DCA Wednesday purchases goes. That, a lot of you I know or a lot of people out there are worried that they'll never reach their stacking goal. You might have set a stacking goal for this accumulation period, assuming that this cycle was going to be like every previous cycle where we were going to have the halving and then Bitcoin might start going up and to the right a little bit, but that we really wouldn't go ballistic until sometime this fall. 6 months to a year after the halving is traditionally when we breach our previous all-time high. Boy, we did that. We did that in effect early. A lot of that obviously is because the BTF, BTF. I hope you bought BTF. I hope you BTFD'd, bought the freaking dip, because of the ETF hype and because of the big traditional financial institutions hoovering up as much Bitcoin as they possibly can. So maybe this pullback is a little bit of that fading, or maybe it's just a pullback like we normally have, because as we mentioned, even in the last episode, but in multiple episodes all the way along throughout the history of this entire podcast, that Bitcoin has several major pullbacks, even during the most explosive bull runs. I think the average is between 5 and 7, up to 30% pullbacks, even when Bitcoin's going absolutely ballistic. Before we get into the news, before we get into a whole lot, let's look at where we are currently, the actual vital statistics. I know we mentioned what block height we were at, what the price was when I purchased, but currently, as of the time of this recording, it is Thursday, March 21st, 2024, and Bitcoin is at a block height of 835,653 and currently ringing in at a US dollar value of $67,060. So about $700 less than where I stacked last night when I did our DCA Wednesday purchase. That means you will currently receive 1,491 sats per every US dollar that you convert into Satoshis. And that's a little bit better still than last DCA Wednesday when you would only receive 1,373 sats per dollar. But still, that's dwindling. I was scrolling through my history of DCA Wednesday purchases just for fun last night or the night before. I guess it was 2 nights ago when I was doing the show prep for what should have been yesterday's show. And man, there was a time when we were purchasing in 20 or 30,000 sats per dollar, and that was just really that was really cool. But those were the days, as they like to say. Either way, I'm getting off on a tangent here. This is a little weird for me because I normally don't record first thing in the morning. I'm expecting the property landscaper to show up any minute now and turn on all their noisy gas-powered equipment. So hopefully that happens after I get done recording. Otherwise, I'll have to hit pause. Did I mention last week that the landscaper at this property actually sawed the back rear bumper of my vehicle in half? So that was a lot of fun with their little power edger, which is basically like a saw on a stick that they go along the edge of the curb to edge the grass. Somehow that got elevated and airborne, and it sliced right across my vehicle's rim, sliced right across the vehicle's tire, and sliced right across the rear bumper. So my car's in the shop. Hopefully that'll get repaired and be as good as new before too terribly long. But man, I've had a lot on my mind this week, and getting sick yesterday was just the icing on the cake. So if I seem a little out of sorts, I'm still under the weather. It's super early. Well, it's not super early. It's 9 a.m, but it's super early for when I'm normally in the podcast. It's a little chilly out, and there's just a lot going on my mind. But I digress. The current block height puts us less than 5,000 blocks away from the next Bitcoin miner award halving. In fact, 4,347 blocks. And that looks like it's still going to be about April 19th of this year. So now less than a month away from the halving. Obviously, we won't know when it's going to occur until it occurs, but it looks like it's certainly going to occur a lot later than the big Bitcoin halving party that's getting ready to go down in El Salvador. I believe in the very first few days of April. I think it was like the 2nd or 3rd is when that begins. It's something I'm very jealous of because of all the really cool Bitcoin halving parties that I've heard about in various places around the world. The one in El Salvador looks like it has the potential to be the most fun. Of course, there are having parties that are going to be kicking off all over the world, wherever more than one pleb, whenever 2 or more plebs can get together. You can have your own halving party. It's obviously a lot easier to get together and celebrate the halving on a smaller scale because we don't know exactly when it's going to occur. And if it's just you and some buddies getting ready to go meet at a bar and stare at a computer screen or your phone screen and wait for the blocks to click by until We reach block 840,000 and enter officially enter the new epoch, the new halving cycle, the new halving epoch. That even though we've eclipsed the cycle's all-time high, we're still technically in the previous cycle. So that all-time high that we set was I guess technically a triple top for the last cycle, depending on your point of view, because certainly we're going to remain in that cycle for 4,347 more blocks. All right. Bitcoin's current price gives it a market capitalization of $1.32 trillion. That's 0.13 trillion fewer than last week, but still above the market cap of silver, which sits at 1.319 trillion. So barely above the market cap of silver, but still not too shabby considering $1 trillion was kind of that magic number for market cap. We've been talking about that all along, that when traditional Wall Street, when the traditional finance media really starts to take Bitcoin more seriously, wouldn't be until we retook that $1 trillion market cap. And boy, howdy have we, because like I said, we're still at a market cap of 1.32 trillion, even with the pullback that we saw. And of course, well, we've recovered about $6,000 or $7,000 since the low of that pullback. So unless it dips again, the 58K gang is still wrong. You know, before we went on to set the new all-time high, before we blasted up into the 70s, there were still those people on Bitcoin Twitter, on crypto Twitter, on Bitcoin X, claiming that Bitcoin was going to have a major pullback. Some of them were saying 58K, the 58K gang. There are still those that were calling for the 40s. And then when Bitcoin got close, when it got into the lower 60s or even as low as 60,000, they were out there gloating, bragging on Twitter. A lot of those posts are still up if you want to go look and see for yourself. Hopefully they're wrong. Hopefully the price has recovered, but you never know. None of us have a crystal ball, including the 58K gang, because had they been right, I use the word correct, the word right loosely here, because their predictions that they made would have been true, but they didn't know any better. They're just pulling that out of their arse. You know, if the fact that Bitcoin may or may not have hit the number that they were claiming it was going to hit, you know, there was nothing magic about their prediction. If they would have happened to have been right, they would have happened to have been right by pure happenstance, just as they currently happen to be wrong. You know, I'm not gloating that they're wrong. I don't know what the price of Bitcoin is going to be. And if you remember how I led into this podcast, I dreamt that Bitcoin dropped all the way to $50. So I'd be thrilled if Bitcoin dropped into the 50s, because in addition to doing our DCA Wednesday stack, I do BTFD. I do buy the dip when I have when it gets low and I have some dry powder. And hopefully you're doing the same as well, because, you know, just last Wednesday, we were lamenting that we weren't going to reach our stacking goal, that Bitcoin was getting too expensive too fast, that whatever your stacking goal is, even when you achieve it, you inevitably set a new stacking goal, a higher stacking goal. Seems like you never have enough. We get that Michael Saylor syndrome where we just want to stack and keep stacking and keep stacking. And, you know, if you have $20 or $100 to convert into Bitcoin, and every week it's buying you fewer and fewer sats, that does kick into FOMO, or even if you don't necessarily want to call it FOMO, it can be downheartening to think that if you have a goal in mind, if you're not a whole coiner, for example, and your goal is one coin, or even if your goal is a half a coin or a quarter a coin, you just want to get to 1 million Satoshis, whatever the case may be. Obviously, the higher the Bitcoin price goes up, the harder and harder it gets to reach that goal. But cheer up, because if you are stacking, even if you didn't start stacking with us 3 years ago, even if this is the first time you've listened to the Bitcoin Bulletin podcast and you're getting ready to make your first purchase, we're still early. Even though Bitcoin is worth insanely more US dollars than it was when we first started this podcast, the average person is still not a Bitcoiner. Even the average Wall Street investor has, even you can't even purchase the Bitcoin ETFs through Vanguard yet. So, we're still early until we see Bitcoin surpass gold's market cap or even beyond that. You're still going to be able to front run the vast majority of the world's population. So any Satoshis you're stacking now are still a lot more than what the average no coiner is going to get. And you as they always say, you get Bitcoin at the price you deserve. And right now that might be $67,000, but there's a lot of no coiners out there who are certainly going to get in a lot higher one day. So I'm rambling a lot here. I know it. Let's carry on with our vital statistics. And speaking of getting Bitcoin at the price you deserve, despite the fact that Peter Schiff comes out from under his rock every time the price of Bitcoin pulls back a little bit, it will still cost you more than 2 pounds worth of gold to purchase just one Bitcoin. In fact, it'll cost you 33 ounces of gold exactly to purchase one Bitcoin. So 2 1-pound bars plus one little round 1 ounce gold coin of Peter Schiff's My Precious Bucks to purchase just one Bitcoin. And while that is a little bit cheaper than it was last week, a couple ounces cheaper in gold terms, it's still a heck of a lot more expensive than it was just last November, when it would have cost you only 1 pound of gold to purchase just one Bitcoin. So the gold bugs like to brag that they're flirting with all-time high territory and the price of US dollar value of gold. But as far as the Bitcoin value of gold has gone, the value of gold has been cut in half just since last Thanksgiving. In fact, looking back last October around Halloween, the beginning of October anyway, mid to beginning of October, Bitcoin was valued at only about 14.3 ounces of gold. Going back to September, it was less than 14 ounces of gold. So less than 1 pound of gold would have purchased you a whole coin less than a year ago. And now it's going to cost you more than 2 full ounces of gold. So despite what your gold bug friends might be telling you, gold is trending to zero in Bitcoin terms. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 3,750 large pepperoni pizzas from Papa John's. That is a couple hundred pizzas fewer than when Bitcoin was at its new all-time high, but still enough to purchase one pizza every day for more than 10 years. And that, as we have mentioned, is more than 2 Bitcoin cycles from now. So we'll have gone through 2 crypto winners and 2 more all-time high euphoria phases if the 4-year cycles continue to hold, if we haven't reached Bitcoin hyper-Bitcoinization. And if we have reached Bitcoin hyper-Bitcoinization, then you'll be swimming in even more pizza, because as I mentioned, I spoke about quite a bit in the last episode, I don't think you'll ever be able to eat your last slice of pizza. If you started purchasing pizza for Bitcoin right now, even with the price down a bit, you'd be buying one pizza a day for almost 10 and a half years. And because the price of Bitcoin will have set its new all-time high in this cycle and its new all-time high in the next cycle, we might be talking about more than a lifetime worth of pizza well before you would flirt with even running out of well before the 10 years you'd flirt with running out of Bitcoin to purchase pizza. Speaking of Bitcoin, Bitcoin's on-chain activity has picked up just a tiny bit. Last week, there were only 68 blocks worth of transactions pending in Clark Moody's mempool, and this week there are 78 blocks worth of transactions. I know this data has changed a little bit, and we're talking about a Thursday instead of a Wednesday, so that sometimes makes a little bit of a difference, but transaction volume has picked up a tiny bit. I was looking at, when I did my purchase last night, and I was looking at the statistics and making screenshots, I noticed that transaction volume was really low compared to where it is now. So, of course, that was also at night, and this is first thing in the morning. Wall Street's awake. The East Coast is bustling with business. Rush hour's over. Everyone's in their offices. Of course, the rest of the United States is still asleep, but Europe, your day is just about over. So my point being, it's the peak of the normie world activity right now. So you would expect there to be more activity on chain than you would had it been 10 or 11 o'clock at night on a Wednesday. Despite that level of activity, if you have a high priority transaction need to guarantee is included in the next block, Clark Moody's fee estimator is estimating that a fee of just 42 sats per VByte will guarantee that you're mined in the next block or so. If you have up to a day to wait, he's recommending a fee of just 11 sats per VByte, and he's recommending a fee of just 8 sats per VByte if you have up to a week to wait. That would be a pretty low to no priority transaction. But as I mentioned, I consolidated some smaller UTXOs a couple of weeks ago now, and I did so for 10 sats per VByte. At the time, that was a low priority suggestion. I think that was supposed to take several days, and it confirmed in the next block. So you never know. Clark Moody's fee estimator usually tells a slightly different story than mempool.space's fee estimator, and that's not, no different today. Mempool.space is recommending a high priority transaction include a fee of 30 sats per VByte. That works out to about $2.82, which is still relatively inexpensive considering that that's FU money you can send to anyone, anywhere in the world in less than 10 minutes and nobody can stop you. If you have a little bit longer to wait, their medium priority transaction recommendation is 28 sats per VByte. They, however, are recommending 25 sats per VByte for a low priority transaction, and even as much as 10 sats per VByte for a no priority transaction. Last night, when I did my DCA Wednesday stack, though, I also looked at mempool.space, and at the time, they were only recommending a fee of 9 sats per VByte across the board. Their high priority next block transaction recommendation was 9 sats per VByte, which was only 85 cents at the time. They had the same recommendation for a no or a low or a medium priority transactions. And those blocks were confirming, because at the time, the most recent block, which was block 835,610, had fees that ranged from 8 sats per VByte to as high as 302 sats per VByte for someone who obviously really overpaid. Some wallets won't let you set your fee, or they'll let you set a range, high priority, low priority, and then they'll make that recommendation for you. But at that time, that block, you could have sent a transaction for 8 sats per VByte. And it got mined. The block before that, the lowest fee was 9 sats per VByte, and there were several in a row that were in the 10 to 9 sat per VByte range. So that's pretty cool. If you were out there looking for the right time to consolidate transactions, last night would have been the time. So if you do have a transaction to make, if you want to consolidate some of your smaller UTXOs to where you don't end up with unspendable dust when fees get really expensive, watch those fees. Watch mempool.space or watch Clark Moody's dashboard. Oftentimes at night and on weekends, those fees drop off quite a bit. And so you can set, depending on what wallet you use, if you have a wallet that lets you use replace by fee or some other fee scheme that will let you change your fee later if you need to speed up how fast your transaction gets confirmed. So that's something you should be paying attention to if you need to do some consolidation, or if there's a transaction that you have to make it on chain and not use Lightning. Although $2.82, if you're buying a house, or if you're paying off some major debt, or if you're, transferring your, a large amount of Bitcoin to a more secure storage scheme, maybe a multi-sig wallet that you've set up or whatever, $2.82 to do that is still really, really cheap. But if you're miserly like me and you want to do it for less than a quarter or even cheaper, maybe pay attention to those fees and be prepared to make that transaction when those fees dip, and hopefully they will. But if they don't, again, that's why we use a wallet that will allow you to do replace by fee, because you may have to bump that transaction if fees never get cheaper. Speaking of fees, speaking of on-chain activity, that metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate, is zooming along at about 4.2 transactions per second. And again, I'm not a TA guy. I think all TA is just smoke and mirrors. It's just voodoo. It's just people convincing themselves they're smarter than they're not. But in the almost 3 years we've been doing this podcast, when transaction volume has been on the decline, price has been on the decline. And when it's been going up, price has been going up. And right now, transaction volume is a little lower at 4.2 transactions per second than it was last DCA Wednesday, when it was 4.51 transactions per second. And while Bitcoin has recovered from its dip to 60, it is obviously about $5,000 lower than it was last DCA Wednesday. And that reflects in that metric. So, it's just a gee whiz, but it's certainly fun to follow. Speaking of on-chain, speaking of difficulty, just a couple hours after our last episode, there was a relatively large mining difficulty adjustment, an upward adjustment of 5.8%. If you're mining at home, or if you work for a commercial miner or own a commercial mining company, it got 5.8% harder to find the next block of Bitcoin, which basically means you're earning 5.8% fewer Satoshis for most miners, because most miners are using a paying scheme where you're receiving a fixed amount of Satoshis for the hash rate that you contribute. Because it's been a little over a week, though, since our last podcast, we're now just 987 blocks away from the next mining difficulty adjustment. As you know, the difficulty it takes to find the next block is adjusted every 2,016 blocks, which is theoretically about every 2 weeks, and that's with the goal of keeping blocks coming in at an average time of 10 minutes in between blocks. When I was doing the show notes a few days ago, it was actually looking like we were going to have a difficulty decrease, but since then, blocks have slowed down as more hash rate has ostensibly been added to the network, because now we're looking like on about the 28th of March, about a week from now, that we'll be looking at another difficulty increase of anywhere between 1.35 and 1.6%, depending on where you're getting your data. That is because blocks are currently averaging 10 minutes and 9 seconds. If you're just a pleb and you're transacting with Bitcoin, the difference between 10 minutes and 10 minutes and 9 seconds is negligible. Really, this only matters if you're a miner, because if you're a miner, it looks like it's going to get slightly less profitable to mine. Of course, it's going to get a heck of a lot less profitable to mine in about a month when the miner reward is cut in half. And I guess even that is one of those it depends kind of scenarios, because one of the FUD that tends to rear its head about this time every halving is the miner death spiral FUD, where people say that the reward's going to cut in half, so the miners are going to be making less money, half as much money as they're currently making, and therefore they're going to shut some of their hash rate off. That's going to slow mining down. That's going to make blocks come even slower, and eventually you get stuck in this theoretical downward hash rate spiral where you might never get to the next difficulty adjustment. That has never happened, and one of the reasons that has never happened is because miners aren't idiots. They know that the halving's coming. They know that it's coming 4 years in advance, and they have plenty of time to prepare for what their strategy is going to be. But also, despite the fact that the reward gets cut in half, how much miners are making actually doesn't necessarily get cut in half. Again, you have to have a little bit of that long-term thinking where you think about what Bitcoin's going to be worth in a few months, not necessarily what it's worth today. But even so, on the date of the last halving, Bitcoin is worth around $10,000 a Bitcoin. And currently, we're talking $60,000 per Bitcoin. So even if you were making 60 grand and that got cut in half to 30 grand, that's still a lot more than the 10 grand you were making at the last halving. So the miner death spiral FUD is just that. It's FUD. It's a myth. It doesn't really happen. So sure, if you look at how much miners were making at the block right before the halving and then the next block right after the halving, in theory, that got cut in half. But, that's something that's been going on for all of Bitcoin's history. And it's something that will continue to go on until that last Bitcoin is rewarded when the halving subsidy goes away in like the year 2140. Well beyond our lifespan, unless something miraculous happens that allows us to live into the hundreds of years. Real quick, I want to thank those of you who are listening on your favorite podcasting 2.0 app, such as Fountain. Of course, that allows you to help support your favorite podcast through the value for value method, where you can either stream sats on a per minute basis or send a shout out to your favorite podcast, which is known as a boost, where you're sending a lightning message. So you're not only giving a shout out where you can say hi or let your favorite podcast know what you think about the podcast in general or the most recent episode, but you can also support them because it is a lightning transaction. You'll be sending them Satoshis. We do not have any boosts to read at this episode, and that is understandable. As expensive as Bitcoin is getting, those sats are getting harder and harder to part with. But we do have a lot of you out there who have been supporting the podcast. And so thank you to all of you who are listening, regardless of who you are and where you are. And speaking of which, our geographic distribution of listeners has remained ossified. The percentages have changed just a tiny bit, just by fractions of a percent. But the order of the top 10 countries has remained identical. The number one country for listenership with more than 50% of listenership still remains the United States of America. So hello and thank you to my fellow Americans. Number 2 remains Argentina. I think Argentina lost about 0.25% from where it was last week, but still rings in at number 2. And so muchas gracias, amigos in Argentina. Germany has moved up a tiny bit. I think they gained Argentina's share. They're still number 3. They haven't changed percentage, but the 0.25% that Argentina lost appears to have been soaked up by Germany. So muchas gracias, amigos in Argentina. But danke schön, mein friends in Deutschland, for remaining the number 3 country as far as listenership is concerned. Number 4 remains Luxembourg. So again, danke schön, mein friends in Luxembourg, or Morien to those of you speaking Luxembourgish. I am having a really hard time speaking today. I haven't had any coffee or any caffeine. I haven't even had any breakfast yet, despite the fact it's almost 10 o'clock in the morning now. I should be wide awake, and I'm not. So I apologize if this is a painful episode to listen to. Hopefully it's just because I'm tired and getting over being sick. But number 4 was Luxembourg again. So danke schön, my friends in Luxembourg. Morien to those of you speaking Luxembourgish. Number 5 remains Canada. So thank you to those of you listening in America's attic and the hopefully not quite as frozen white north. Number 6 remains Spain, so muchas gracias amigos in Spain. Number 7 remains Colombia. Again, muchas gracias amigos in Colombia. Number 8 remains Sweden, so hey to all of you in Sweden. Number 9 remains our cousins across the pond in the United Kingdom. So hello, thank you, friends in United Kingdom. And number 10 remains Venezuela. So muchas gracias amigos in Venezuela. And thank you to those of you, regardless of where you're listening, because those aren't the only 10 countries we have listeners in. When I scroll through, we start talking about fractions of a percent of listenership, but literally we have people listening all over the world, and that is really flattering. It's really cool to know that you're out there and that you're out there all over the world, that we truly have an international audience, and that is just awesome. Back to the price, back to the news. We've already spoken about price, but I want to point out that we were lamenting just a week ago that anyone who purchases Bitcoin for under 69,000 or for 67,000 or whatever the current price of Bitcoin is, in less than a year, when Bitcoin is set, it's whatever the ultimate all-time high is. There's people calling for $250,000 Bitcoin. There's people calling for $1 million Bitcoin or more. The point being, those of us that are purchasing right now, you're going to be called lucky. You're not going to be called smart. You're not going to be called a good investor. You're not going to be called intelligent. You're going to be called lucky. Just like the people that purchased for 20,000 are called lucky now, or the people that got in when Bitcoin was less than 1,000, or the people who got in 10 years ago when Bitcoin was, $1. I guess that would have been more than 10 years ago now, but you get my point. Again, just a week ago, we were lamenting that we hadn't stacked hard enough. Bitcoin is at around, $73,000 a Bitcoin. And this is a golden opportunity. Maybe Bitcoin retraces a little more. Maybe it doesn't. Maybe we go back to setting new all-time highs. None of us have a crystal ball. The point being, if you have a long-term mindset and if Bitcoin keeps doing what Bitcoin always does, it's going to go a heck of a lot higher. And the people that are purchasing right now, those of you stacking alongside of us, we're going to be blown off as people who simply got lucky in a year, 4 years, 10 years, certainly 10 years from now. People are going to look back and go, man, can you imagine those people that stacked for just $60,000 of Bitcoin? Man, I can't believe we didn't do that. They were so lucky. How did they even find out about Bitcoin? Coming for the people right now that are, saying that we're in a bubble, that are calling Bitcoin tulips, etc. Speaking of haters, you can't have a price drop without Peter Schiff sitting in front of his computer and tweeting away like he's Randy Marsh from South Park in that episode where the internet has gone out and they're kind of doing the Grapes of Wrath thing, and they've all gone to California looking for some internet. And he breaks into the shack where the internet is. And if you've seen the scene, you know exactly what I'm talking about. And that's how I've got to envision Peter Schiff right now, anytime the price of Bitcoin's done, because, man, he comes out just with the most ridiculous takes. And I'm sure you've all figured out his shtick by now. His business is he owns Schiff Gold. His business is to sell gold. He's a gold bug, not only by philosophy, but by necessity. That's his business. If you're a used car salesman, buying used cars is the most important thing you could huck. You could sell, and for Peter Schiff, that's gold. So just 2 days ago, Peter Schiff was tweeting, "Yet, despite your reckless leverage buying, Bitcoin is still down 15%. Bated breath, that's me adding, from its high price just 5 days ago. Now that you're done buying, the bottom can really drop out of the market. When Bitcoin hits 20K, MicroStrategy will be down 3.25 billion. At 10K, MicroStrategy will be down 5.5 billion. Of course, Peter Schiff is not just a gold bug. He's also a moron, because since he sent that post out, Bitcoin has recovered significantly. We're no longer down 15%, and people have not stopped buying. Remember, of course, last week that douche was actually shilling NFTs. TradingView ran an article titled "Peter Schiff dives into Bitcoin NFTs with, quote, Golden Triumph art project. Peter Schiff, a well-known critic of Bitcoin and staunch supporter of gold, has taken an unexpected turn into the world of Bitcoin-based non-fungible tokens, NFTs. Schiff announced his involvement in an art project named Golden Triumph on May 26, 2023 via a tweet. That tweet, of course, that says May 26th. 2023, I guess. So this is something he's reshilling again, because last week, right after our DCA Wednesday episode, he tweeted, "One thing you can do with your overpriced Bitcoin is buy one of 6 Golden Triumph ordinals currently offered for sale. If you think 21 million Bitcoin are scarce, there are only 50 of these babies. Get ready, hodlers. These bad boys are going to the moon." So my point being is he's a shyster. He's a con man. He's not just a gold salesman and a professional troll on Twitter. If he really, really was a principled individual that didn't like Bitcoin because it has no intrinsic value, you can't eat it, you can't turn it into jewelry, whatever, he would not be selling JPEGs, limited edition JPEGs. Apparently he understands scarcity, right? Because he's saying there's only 50 of his JPEGs. Anyway, you get my point. Peter Schiff is an idiot. And there's a lot of people out there that speculate he's secretly a hodler. Don't know, don't care. Personally, I hope he's not, because when Bitcoin does go to the moon, there'll be a lot of schadenfreude in watching him. And he'll still be a very rich man, unless he has more of his assets seized. Remember, he got in trouble with his Euro Pacific Capital Bank not too terribly long ago. But getting back to the Bitcoin price and the quote-unquote pullback, remember I've said that there's 5 to 7 pullbacks in a normal bull run. I tweeted out, if you aren't following us on @BTC Bulletin Pod, I tweeted out or retweeted someone's post where they had put together a chart showing the previous bull runs, the previous halving cycles, and precisely how big those pullbacks were. And at the time, they were showing that we were in that 15% drop pullback that Peter Schiff had mentioned. But even during the run-up that we've had, even during the run-up to the new all-time high, we had a 22% pullback, another 22% pullback, a 20% pullback, and a 22% pullback before that. Between the two all-time highs of the last cycle, we had a 26% pullback. Right before the first all-time high, when Bitcoin got to 66,000, we had a 23% pullback. On its major run-up, we had a 32% pullback before that, a 15% pullback before that. And at the bottom of the last bull run, not the very bottom where we had the dip when they had the lockdown because of the virus and Bitcoin dropped like 3,000, but after it had recovered and the bull run had officially kicked off after the halving, we had a 23% pullback. So we had 5 major pullbacks during the last bull run. The 2016 to 2017 bull run, we had 7 major pullbacks, a 31% dip, a 41% dip, a 40% dip, a 34% dip, another 34% dip, a 40% dip, and a 43% dip, all after the halving, all while Bitcoin was running to set new all-time highs. So the point being, this is normal. This is just Bitcoin doing what Bitcoin does. One of the reasons Adam Meister says you have to have that long-term thinking. It's definitely why you need to have strong hands, because if you panicked and sold your Bitcoin, not only shame on you, you sold your Bitcoin to BlackRock. You sold your Bitcoin to those evil Wall Street bankers. And that is certainly something we don't want to see you do. Fortunately, I have faith in you that you haven't sold any of your Bitcoin, that it was actually, most of it we know was outflows of people that have been stuck in Grayscale Bitcoin Trust, that have been suing Grayscale actually for a way to try and get out. And once it was converted to an ETF, they had that out. Hey, good for them. They're finally able to ditch Barry Silbert's scam product. And some of them are actually turning a profit in doing so. And most of them have been actually either rolling that into Bitcoin that they're self-custodying, or possibly into some of the other ETFs, because for most of the history since the ETF launch, we've seen positive inflow days where more people were buying BlackRock and the other ETFs that were selling Grayscales. In the last couple of days, that's kind of flipped. We actually had a few net negative outflow days, despite the fact that the other ETFs were still taking in Bitcoin. More Bitcoin was flowing out of GBTC. That can only happen for so long. And even if that were to continue to happen for a month or 2 months, eventually GBTC will run out of sellers. And even if they don't run out of sellers before the halving happens, well, we're less than a month away from the halving. Half of the freshly mined Bitcoin that's being dumped on the market will evaporate instantaneously. Not quite with the flick of a switch, but with the execution of the code. And so, better days are coming as far as Bitcoin's price is concerned, unless your idea of a better day is buying on the cheap, in which case better days are running out. Buy it while you can. Of course, the exact opposite of Peter Schiff is Michael Saylor. Last week, we'd reported that Michael Saylor had stacked an additional 12,000 Bitcoin, keeping MicroStrategy just ahead of the BlackRock ETF's holdings in terms of position size. Of course, BlackRock ultimately went to squeak past MicroStrategy, and that was kind of inevitable with them buying $500 million a day worth of Bitcoin on behalf of their clients. But not to be completely outdone, Michael Saylor and MicroStrategy bought the dip. MicroStrategy tweeted out that they had purchased an additional 9,245 Bitcoin using $623 million proceeds from the convertible notes and excess cash for $67,382 per coin. Obviously about where we are right now. So they didn't necessarily buy the lowest, but they didn't buy at 73 either as of March 18th. So this tweet is 3 days old now. MicroStrategy holds 214,246 Bitcoin, acquired for an average price of just $35,160. So well in the green, despite Peter Schiff's mocking of MicroStrategy's holdings. And perhaps as significantly, more than 1% of the total supply of Bitcoin that will ever be issued. Obviously, significantly more than 1% of the Bitcoin that currently exists, but even at Bitcoin's total of 21 million, when the last Bitcoin miner award is issued, they hold more than 1% of all the Bitcoin that will ever be issued. Now, some people are starting to worry about that. There has been some lamenting on Twitter that we don't want anyone controlling that much Bitcoin. And I addressed this last week where I said, that really doesn't matter, because thank God we didn't fall for that proof of stake BS like Ethereum did. Because if this were Ethereum controlling 1% of the stake meant you basically had 1% of the voting rights. As a proof of work system, all Michael Saylor has is a really huge stack of 214,000 Bitcoin. But as far as say over the protocol goes, say over the mining of block goes, he has no more say than you or I have if you're running a node at home on a Raspberry Pi or on an old laptop. So congratulations to Michael Saylor and MicroStrategy for eclipsing the 1% of all of Bitcoin that will ever be issued mark. That's a pretty big achievement, something a lot of us could only dream of. And hopefully if you were in the financial capacity to do so, you would have already done so, right? I certainly am not in that position. So while I'm happy with my stack, it is nowhere near Michael Saylor or Grayscale's. All right. I wanted to keep this short and sweet, mainly because I wanted to get this done before the facilities people get here and start making lots of noise with their leaf blowers and power tools. Also because I am still feeling a little under the weather. Once again, I do apologize for getting this episode out, a day late. Hopefully you stacked on Wednesday just like we did, that you weren't waiting for me, that if Wednesday is your DCA day, then you stacked. If you stack according to your own schedule and you just enjoy listening to this podcast, thank you for being a listener. You are the reason why I do this. Knowing that you're out there, knowing that you're listening, is the reason I come into the studio and sit in front of this microphone every week. And speaking of which, before I go, I want to ask those of you to help support the podcast in a non-financial way. And, if you want to send a boost, or if you want to stream sats while you're listening, that's really awesome. We do appreciate that. But you can support us for free just by following us on Twitter or X. Remember, on Twitter, we are at BTC Bulletin Pod. The more followers we get, the more likely our tweets are to be featured, and the more likely for no-coiners, noobs, to see what Bitcoin is all about, to learn about dollar cost averaging from us. And so you can help support us, and you can help Orange Pill people, hopefully, by just following us on Twitter. Again, we're at BTC Bulletin Pod on Twitter. You can also feed that algorithm monster by rating and reviewing this podcast on whatever platform you're listening. If you're listening on Apple Podcast, remember a couple of weeks ago we mentioned that they had started turning off automatic downloads for podcasts that didn't basically produce a minimum of 2 podcasts a week. And more importantly, if you didn't listen to both of those podcasts, that even if you were subscribed, they were basically going to unsubscribe you. And I know a lot of podcasts saw listeners drop off as a result of that. So if you're listening on Apple Podcast, if you just make sure that you're subscribed to us still, basically that you still have those automatic downloads enabled, that helps feed that algorithm monster. And again, the more listeners we get, the more likely this podcast is to be featured when someone's scrolling through looking for podcasts, and the more people we're going to help we'll be able to help Orange Pill. Most importantly, though, I just like to hear from you. So if you're already following us on Twitter and you haven't reached out to say hi, shoot me a DM. Let me know what you think about this podcast, what you think about the podcast in general, maybe this episode or some other episode that might have tickled your fancy, or something you'd like to hear me talk about on a future episode. And of course, if you're not on Twitter, we are on Nostr, and the NPub for our Nostr account is in the show notes. So if you're looking at your phone right now while you're listening, if you just scroll down through the show notes, you'll see our NPub. And of course, if you're neither on Twitter or Nostr, you can send me an email at bitcoinbulletin@protonmail.com. And I do read those emails, and I do get back to everybody who emails me. And I love to hear from you. It isn't just about helping support the podcast. It's about knowing who you are, knowing what you like about the podcast, and getting feedback from the listenership. So follow us on Twitter at BTC Bulletin Pod. Give us a shout out. Send me a DM. Send me an email at bitcoinbulletin@protonmail.com. I do check that email. I do respond to those emails. But either way, don't forget to join us next Wednesday, hopefully, if all is well, if I'm not in bed sick. Hopefully that's a one-time deal. But follow us next Wednesday and every Wednesday while we grow our stack of Satoshis together, while there are still people out there foolish enough to sell us Satoshis for fiat dollars. But until that time, keep on stacking those sats, you sexy sat stackers.